Two-fund versus three-fund portfolio. Which one is right for you? If you want to grow your wealth effortlessly and enjoy financial freedom while your investments work for you, even while you sleep, this strategy is for you. But if you prefer constantly checking stock prices, stressing over market fluctuations, and trying to time the market, then this approach might not be for you. Welcome to the Wealth Echelon, your ultimate destination for mastering personal finance, building wealth, and achieving financial freedom. Whether you're a beginner looking to budget smarter, an aspiring investor exploring the stock market, or someone seeking practical strategies for debt reduction, this channel is here to guide you every step of the way. Join us as we break down complex financial concepts into simple, actionable steps. Expect expert tips, proven strategies, and real-world examples to help you take control of your money and unlock your financial potential. Subscribe now and start your journey to financial mastery, one smart decision at a time. Martin is an investor who believes in long-term wealth building through smart and diversified investing. His ultimate goal is to achieve financial freedom, where his investments generate enough returns to support his lifestyle without relying on active income. Investing can be overwhelming, but a structured portfolio can simplify the process. Two popular strategies are the two-fund and three-fund portfolios. Both are designed for diversification while keeping things simple. But how do they compare? This guide will explore why some investors prefer a two-fund approach, why others add a third, and how inflation impacts these choices. We will also analyze an investor, Martin, who is looking for a solid investment strategy with his initial $500 and tracks its growth over time. The Warren Buffett two-fund portfolio. Warren Buffett, one of the most successful investors of all time, has recommended a simple two-fund portfolio for most investors. His approach consists of 90% S&P 500 index fund, e.g. VOO, Vanguard S&P 500 ETF, 10% short-term government bonds, e.g. BIL, SPDR, Bloomberg 1 to 3 month T-bill ETF. Why Buffett prefers this portfolio? Market growth potential. The S&P 500 has historically delivered strong long-term returns. Simplicity, easier to manage with minimal adjustments. Low fees, ETFs like VOO have low expense ratios. Downside protection. Bonds provide liquidity and stability during market downturns. Example, Martin invests $500, allocating $450 to VOO, 90%, and $50 to BIL, 10%. If VOO grows by 10% in a year and BL by 3%, his portfolio becomes VOO, $450, $495, BL, $50, $51.50. Total, $546.50, 9.3%. By following Buffett's strategy, Martin benefits from strong equity returns while maintaining a safety net with bonds. Why two funds? A two-fund portfolio is a simple investment strategy that consists of only two asset classes. Typically, a broad stock market fund provides exposure to a diversified basket of stocks. A broad bond market fund adds stability and reduces risk during market downturns. Examples of a two-fund portfolio. 1. Warren Buffett's two-fund portfolio. 90% S&P 500 index fund, e.g. VOO, Vanguard S&P 500 ETF. 10% short-term government bonds, e.g. BIL, SPDR, Bloomberg 1 to 3 month T-bill ETF. Designed for high growth with minimal bonds for stability. Second, total market two-fund portfolio. 80% total stock market ETF, e.g. VTI, Vanguard Total Stock Market ETF. 20% total bond market ETF, e.g. BND, Vanguard Total Bond Market ETF. Provides broad market diversification while keeping things simple. A two-fund portfolio consists of two asset classes usually, a total stock market ETF, e.g. VTI, Vanguard Total Stock Market ETF. A total bond market ETF, e.g. BND, Vanguard Total Bond Market ETF. Benefits of a two-fund portfolio. Simplicity. With only 2 funds, managing and rebalancing is easy. Diversification. Covers broad market exposure with stocks and bonds. Lower costs. Fewer funds mean lower fees and transaction costs. Example. Martin starts with $500 and invests $400 in VTI, 80%, and $100 in BND, 20%. If VTI grows by 10% in a year and BND by 4%, his portfolio would be VTI $400, $440. BND $100, $104. Total $544 plus 8.8%. If he continues adding $100 monthly, his portfolio benefits from compounding growth. Why add 3? A 3-fund portfolio is a simple yet diversified investment strategy that includes 3 core asset classes. U.S. Stock Market Fund provides exposure to domestic stocks. International Stock Market Fund diversifies globally beyond U.S. markets. Total Bond Market Fund adds stability and reduces risk. Example of a 3-fund portfolio: a common allocation using Vanguard ETFs, VTI, Vanguard Total Stock Market ETF, covers the entire U.S. stock market. VXUS, Vanguard Total International Stock ETF, covers global markets outside the U.S. BND, Vanguard Total Bond Market ETF, provides exposure to U.S. bonds for stability. A 3-fund portfolio includes Total Stock Market ETF, VTI, Total Bond Market ETF, BND, International Stock Market ETF, VXUS, Vanguard Total International Stock ETF. Advantages of a 3-fund portfolio: global diversification reduces risk by adding international exposure. Potential higher returns. Non-U.S. stocks can outperform at times. Currency hedge. Different economies provide a balance in downturns. Example, if Martin switches to a 3-fund portfolio, he might allocate $350 to VTI, 70%, $100 to VXUS, 20%, and $50 to BND, 10%. If VTI gains 10%, VX is 12%, and BND 4%, his new total is VTI, $350, $385. VXUS, $100, $112. BND, $50, $52. Total, $549, 9.8% growth compared to 8.8% before. Over time, this additional diversification can provide better long-term stability. High inflation, how it affects portfolio choices. Inflation erodes purchasing power, making asset allocation crucial. Bonds tend to perform poorly in high inflation environments, whereas stocks and commodities often do better. 2-fund portfolio in high inflation. Stocks, VTI, can outpace inflation. Bonds, BND, may lose value if interest rates rise. 3-fund portfolio in high inflation. International stocks, VXUS, could benefit from stronger foreign economies. Bonds remain a drag unless adjusted for inflation, e.g., TIP, Treasury Inflation-Protected Securities. Example, if inflation is 6% and Martin's portfolio returns only 5%, he loses real value. Adding an inflation-protected bond ETF, SCHP, Schwab USTIPS ETF, could help maintain purchasing power. 3rd fund candidate, what to choose. For investors expanding beyond a 2-fund portfolio, options include VXUS, international stocks, commonly used for global diversification. SCHP, TIPS ETF, helps combat inflation. VNQ, real estate ETF. Real estate can hedge against inflation. Example, if Martin adds VNQ 10% to his 3-fund portfolio, it could help balance inflation risks. Allocations and variations. 2-fund portfolio allocations. Conservative 60% BND, 40% VTI. Balanced 50% BND, 50% VTI. Growth 20% BND, 80% VTI. 3-fund portfolio allocations. Conservative, 50% BND, 30% VTI, 20% VXUS. Balanced, 40% BND, 40% VTI, 20% VXUS. Growth, 10% BND, 70% VTI, 20% VXUS. Example, Martin, aiming for growth, might opt for 10% BND, 70% VTI, and 20% VXUS. Long-term growth, Martin's investment journey. Assume Martin invests $500 initially and contributes $100 monthly. Buffett 2-fund portfolio, 9.3% return average. $7,900 after 5 years. Traditional 2-fund portfolio, 8% return average. $7,400 after 5 years. 3-fund portfolio, 9% return average. $7,700 after 5 years. Over decades, even a 1% return difference can mean thousands of dollars. Which portfolio should you choose? Buffett's 2-fund portfolio, best for long-term stock growth with minimal bonds. Traditional 2-fund portfolio, ideal for simplicity and minimal management. 3-fund portfolio adds diversification and protection from market downturns. Considerations: inflation, personal risk tolerance, and time horizon play key roles. For Martin, Buffett's 2-fund portfolio offers strong long-term growth potential, making it a compelling option. However, diversification benefits from a 3-fund approach should not be ignored. Regardless of the choice, consistency and long-term investing matter most. If you found this breakdown of 2-fund versus 3-fund portfolios helpful, don't forget to smash that like button to support the channel. Comment below. Which portfolio strategy do you prefer? 2 funds or 3 funds? Let's discuss. And hit that notification bell so you never miss out on future insights into smart investing. Thanks for watching, and I'll see you in the next one.